What if I told you that the sudden drop in price you saw last week wasn't an accident? What if that violent wick, the one that hit your stop loss and reversed like nothing happened, wasn't random at all? What if it was bait? Imagine this. A global institution needs to fill a $400 million position, but they can't just press buy or sell like you and me. If they do, the price moves against them. Slippage eats them alive. So what do? They wait. Or worse, they build the trap. They engineer the exact moment where you and thousands of other traders will panic, sell, close, reverse, and give them the liquidity they need to enter silently. And when it's done, the price returns right where it started, leaving you confused, angry, and worst of all, thinking you made a mistake. But you didn't. You were baited. You were playing in a market that was never designed for you to win. A market that doesn't just move, it manipulates. This video isn't about technical analysis, it's about psychological warfare. It's about the invisible battlefield that exists between your emotions and their execution. So if you've ever looked at a chart and thought, no, Saptis, that move made no sense, you're right. And today, we decode exactly why. Welcome to the liquidity void. Have you ever watched price drop like a knife through butter? No resistance, no hesitation, just a vertical line slicing the chart clean in half? If you're like most traders, you probably thought, wow, volatility. Or maybe there must have been news. But what if there wasn't? What if that violent move wasn't volatility? What if it was precision? Let me introduce you to a concept that very few traders truly understand, the liquidity void. A liquidity void isn't a gap in price. It's a vacuum, a psychological and structural hole in the market, carefully engineered to extract your emotions, your capital, and your sense of control. Imagine this. A massive institution is sitting on a $500 million position they want to execute, but the market is too calm. Price is ranging, volume is thin. There's no opportunity for them to get in or out without causing slippage, without exposing their size. So what do? They create urgency. They light the match. They trigger a void. First, price gets compressed. No movement, no volume, a false sense of safety. Retail traders start to relax. They think nothing's happening, and that's exactly what the institution wants, your guard to drop. Then the floor collapses. Price plummets instantly, violently. Liquidity vanishes. There are no bids, no reaction, just a long red candle that looks like a free fall into hell. Your stop loss is hit before you even understand what's happening. And then, just as fast as it dropped, price reverses, goes right back up. No news, no catalyst, just emptiness and confusion. That's the liquidity void. It's not just a spot where price falls, it's a zone engineered to punish predictability. It's a psychological black hole, one that pulls traders in only to chew them up and spit them out. And the worst part? It works because your brain isn't built for it. You see, retail traders make one fatal assumption, that all price movement is natural, that everything on the chart is organic. But institutions don't see charts. They see order flow. They see your behavior, your consistency, your stops, your habits. They know when the average trader places their stop loss. They know where breakout traders will enter. They know where fear kicks in, and they weaponize it. A liquidity void is not a mistake. It's an opportunity for them. Let me give you an example. September 14th, 2023. EUR/USD had been flatlining for days. Nothing was happening, just tight, boring range. The ECB was due to speak, but nothing major was expected. Then suddenly, boom. In 90 seconds, price dropped 140 pips. No bounce, no hesitation, just a vertical flush through every support level traders had marked. Forums exploded. Black swan, ECB leak, algorithmic error, but none of those things happened. There was no news, only the void, because in the background, a major fund had been accumulating shorts, quietly, silently, waiting for enough retail longs to load in. And when the trap was full, they pulled the trigger. That move wasn't volatility. That was market architecture. That was a kill zone. Here's what traders don't realize. The liquidity void is predictable, not in time, but in structure. It appears after compression, after false calm, after fake breakouts, and its entire purpose? To bait your emotions and fill their books. They need your fear to complete their plan, and your reaction is their entry signal. So the next time you see a sudden drop that makes no sense, don't ask, what caused this? Ask, who needed this? Because when you change that question, you start seeing the truth behind the chart. Let's get one thing straight. The biggest trap in trading isn't on the chart, it's in your brain. We love to think we're logical, that our strategies, our indicators, our backtesting keep us safe. But when the screen flashes red, when a candle drops 200 pips in seconds, something primitive kicks in. Your system doesn't fail, your nervous system does. Because a liquidity void isn't just a structural trick, it's a biological weapon. It targets the oldest part of your brain, the amygdala, the center of fear and survival, the part of your mind that evolved to help you escape predators, not price action. When that red candle slices through support, your brain doesn't see a trade. It sees a threat. It thinks you're being hunted. It floods your body with cortisol, adrenaline, your pupils dilate, your palms sweat, your chest tightens, and you freeze. Or worse, you act without thinking. Click close, click reverse, click revenge, and just like that, you're not trading anymore. You're reacting. You've gone from strategist to prey, to prey. Let me tell you a story. March 2023. The banking crisis was shaking markets. Bitcoin had been consolidating around $20,800 for hours. Sideways movement, equal highs, clean setup. One trader I worked with took a perfect long, textbook entry, risk managed, everything aligned. Then came the void. Price nuked $1,000 in 3 minutes. The trader panicked, exited instantly, lost $3,000. And then 12 minutes later, Bitcoin returned to his exact entry and continued 5% higher. The strategy didn't fail. The plan didn't break. He did. His body overrode his blueprint. In that moment, his brain wasn't trading, it was surviving. That's the real trap. Not the chart, but the emotional hijack that follows. You see, institutions know this. They've studied it, modeled it, built algorithms around it. They know how to trigger your amygdala, how to hijack your decision making. Because when your logical brain goes offline, they don't need to beat your strategy. They just need to outweight your fear. Here's the truth. Most traders don't lose at their entry. They lose in the 10 minutes after. The aftermath, the panic loop, the need to get it back, to fix it, to feel in control again. But that's not control. That's chaos. So if you want to break free from the trap, you need to stop treating trading as math and start treating it as neuroscience. You need to know what your body does under pressure, because every time you hit that close button out of fear, you're handing your position to someone who's been waiting patiently to take it. So ask yourself, have you ever exited a trade even though your plan said to hold? Have you ever entered again right after losing just to feel better? Have you ever looked back and thought, that wasn't even me? I don't know why I did that. That's not weakness. That's biology. And unless you learn to regulate your nervous system, the market will regulate your account. So next time you feel that spike of panic, that urgent need to click, pause, breathe. Because in that space between emotion and reaction, that's where mastery begins. The trap isn't in the chart, it's in you. But the good news is, if the void lives in your brain, so does the key to escaping it. Let's kill a myth real quick. Markets don't just crash, they get pushed. We're taught to believe that price moves are natural, that volatility is organic, that wild candles are just reactions to news or sentiment. But institutions don't react to markets. They manufacture reactions. And one of their most effective tools, the engineered drop. Now, I want you to step into the mind of an institution for a moment. You're managing a $500 million position. You need to enter or exit without alerting the herd. But the order book is thin. If you just smash sell, you'll create slippage, get terrible fills, and end up hurting your own position. So, what do? You create a moment of chaos, a moment where everyone else is so distracted, so panicked, so reactive, they give you exactly what you need. You build the drop. Here's how it works, step by step. Step 1, accumulation. You begin accumulating your position quietly. Small lots, spread across time frames, no big spikes, no attention, just quiet stealth. Step 2, distraction. You trigger a small fake breakout, maybe by placing spoofed orders, maybe with some timed news. Price pops 20, 30 pips. Retail traders think it's a real move. They pile in. Twitter lights up. GBP is pumping. Step 3, the pull. Just as excitement peaks, you yank the rug. The spoofed bids disappear. The fake breakout reverses. Price dumps hard, fast and violent. Retail long positions get wiped. Their stops become your entry fuel. Step 4, the void. You push price into an engineered vacuum. There's no liquidity left, no bids, only fear. The move becomes exaggerated, not because of fundamentals, but because of desperation. Everyone starts selling, but guess what? You're buying silently, calmly, confidently. And finally, step 5, the reset. Once you've filled your orders, the market stabilizes and then it reverses back to where it started, back to normal. Except now you're fully positioned. And retail, they're out. Or worse, shorting too late. This isn't a conspiracy theory. It's not market magic. It's just logistics because when you need to move massive size without causing slippage, you need liquidity. And liquidity doesn't just exist, it must be created. And that's where your panic comes in. Think back to the last time you chased a breakout. Did it reverse immediately? Did it feel like you entered exactly when the trap sprung? That's not coincidence, that's coordination. Here's something few traders realize. Most engineered drops happen during predictable windows. Just after fake breakouts, right before or after news, when volume is thinning, when price has been flat for too long, that tension builds, the market breathes in, and then institutions release the pressure. Boom, the drop. Not because something went wrong, but because everything went right for them. Let me give you a real case. April 14th, 2023. Gold was coiling under $2,000. Retail sentiment 84% long. Every indicator pointed to breakout. And it came. Wick above $2,010. Buy stops triggered. Everyone cheered. Then collapse. A $60 drop in 5 minutes. No bounce, no warning. Just vertical pain. What happened? Institutions engineered that exact moment to trigger retail confidence, activate buy stops, absorb liquidity, reverse and trap everyone. It wasn't a mistake. It wasn't random. It was designed. And until you accept that the market is structured, not spontaneous, you'll keep blaming yourself for moves that were never about you. Institutions don't trade against you, they use you. So next time you see price explode for no reason, pause. Ask not what just happened. Ask who benefited. Because once you start seeing price through the lens of intent, not reaction, you stop being the prey. You start thinking like the engineer. And that's where the game begins to shift. The candle didn't kill your trade, your reaction did. Most traders think their biggest mistake is a bad entry, or maybe a tight stop, or poor risk reward. But it's not. The real danger is what happens in the 60 seconds after. That's when your plan collapses. That's when the panic loop begins. Let me explain. A trader enters the market with a plan. They have rules, a system, a target, a stop loss. Everything looks clean. Then the void hits. Price drops hard. Their stop is taken out, not by much, maybe a wick, maybe one extra tick. Now here comes the moment that decides everything. They feel it in their chest, that sting, that surge of emotion, and they think, I can't end the day like this. So they click again. They re-enter, maybe in the same direction, maybe in the opposite. But it's no longer a trade. It's a response, a reaction to pain, an attempt to undo the damage. Then it gets worse. They lose again and again. Soon, they're switching time frames, flipping positions, trading setups they don't even understand. And after 30 minutes, they've gone from one small loss to a spiral. That spiral has a name, the panic loop, and every institution counts on it because they know once they trigger one emotional exit, they'll get 5 more irrational entries from you. They don't just want your stop, they want your identity to collapse. Here's how the panic loop plays out in your mind. Shock. What just happened? Anger. That was unfair. Desperation. I'll get it back. Impatience. Forget the plan. Detachment. I don't even care anymore. By the time you hit step 5, you're trading size you never use on setups you never touch in a market you don't even recognize. And you lose not because of the setup, but because of emotional inertia. You've become a hostage to your nervous system. Let me tell you a real story. April 2023, a funded trader I mentored had just finished a winning streak. Strong system, consistent mindset. She was shorting NASDAQ after FOMC. Perfect setup, clean levels, everything aligned. Then the void. Price spiked 300 points in 90 seconds. Her stop was hit, a normal loss. But she didn't walk away. She re-entered long, closed it in panic, entered short again, then long again. 4 trades, 15 minutes. Final result, a 6% account drawdown. The original trade, only a 1% loss. But the other 5%, that was the panic loop. That was the trap behind the trap. Because institutions don't just want to trigger your stop. They want to trigger you. They want the version of you that trades from emotion, breaks rules, doubles down, seeks revenge, feels out of control. Because that trader is predictable. So ask yourself honestly, have you ever felt the need to get it back after a stop loss? Have you entered trades you don't even remember placing? Have you watched yourself spiral in real time but couldn't stop? If you said yes, you've been caught in the loop. But here's the shift. The panic loop doesn't start with the loss. It starts with the story you tell yourself about the loss. You think, that shouldn't have happened. And now you're not trading anymore. You're arguing with reality. But reality doesn't care. It moves on. And if you don't detach, you get left behind, emotionally wounded and financially drained. So how do you break free? 1. Pause. After any stop out, step away, 5 minutes minimum. Let your nervous system cool. 2. Name it. If you feel the urge to enter immediately, say it out loud. This is the loop. 3. Breathe. Regulate your state before re-entering the market. 4. Forgive. You're not weak for reacting. You're human, but you can train to respond instead. Because the best traders aren't the ones who never feel fear, they're the ones who don't obey it. And when you stop giving power to that loop, when you break the cycle, you become everything institutions don't expect. You become untouchable. Void traps rarely whisper, they scream. The problem is, most traders can't hear them. They're too focused on price, on candles, on indicators. They miss the silence before the storm. But if you listen closely, if you train your eyes and instincts, you'll see it. Because a liquidity void doesn't just appear out of nowhere. It builds tension. It follows a pattern. And once you learn to spot that pattern, you can see the trap coming. Let me break it down. Before every engineered void, the market gets quiet, not calm, deceptively calm. Price starts to move sideways, volume dries up, volatility compresses, the candles get smaller, it looks boring, safe, you let your guard down, then, boom, an explosive move. A spike, a drop, a sudden vertical candle that makes no sense. But the truth is, it made perfect sense. The warning signs were all there. Let's go back to October 28th, 2022. Bitcoin had been hovering around $20,100 for 6 hours straight. Price didn't move more than a few dollars. Volume was declining every hour. Traders were zoning out. Then suddenly, spiked to $2,800. Instant, violent. Thousands of breakout traders jumped in. But here's what most people missed. No accumulation before the move, no volume support behind the candle, no higher lows or compression patterns, just empty space. Then, collapse. Price dropped to $19,200 in a single candle, a $1,600 trap in under 15 minutes. That was a liquidity void in action, but it was also announced in advance if you knew what to look for. Void detection checklist. Ask yourself, compressed structure, has price been ranging unusually tight for too long? Dying volume, are candles forming but participation dropping? No market memory, is price moving in a zone with no past absorption or order flow? Fake energy, do candles move far but without matching volume? Swiss cheese order book, are there huge holes in the limit orders? Sudden excitement, do you feel urgent, excited, or afraid of missing out? That last one, that's your inner alarm bell. Because here's the psychological truth. When you feel urgency, you're being baited. The void always comes when the crowd feels most certain. When a move looks too clean, when a breakout feels too easy, when you say to yourself, I can't miss this one, that's when you pause. That's when you wait. Because real opportunities survive scrutiny. Real moves don't vanish in 5 seconds. But void traps, they count on your reaction time being faster than your reflection time. So build in a delay when you feel that emotional spike, count to 5, breathe, look at volume, check the structure. If it still makes sense after 5 seconds, maybe it's real. But if the feeling fades with time, it was the trap talking. Because the void isn't just a chart pattern, it's an emotional pattern. It begins with market tension and ends with retail liquidation. And once you learn to detect that tension, once you recognize the shape of fear before it explodes, you're no longer the target. You become the observer. And the observer never gets trapped. Let's flip the script. If the void is a trap, if it's engineered to make you panic, if it's designed to steal your position, what happens when you stop running? See, the liquidity void only works because people react, because they sell in fear, exit in pain, reverse in confusion. But what if you didn't? What if you saw that same drop and smiled? What if, instead of trying to escape the void, you learned to surf it? Because here's the hidden truth. The void is predictable. not by time, but by behavior. It has a rhythm, a shape, a signature. And if you learn that shape, not fear it, you can enter where others exit. You can hold where others fold. You can profit from the exact panic that used to destroy you. Let me show you how. There are three primary setups where traders flip the trap. The chatter. One, the post-void reversal. This is the classic one. Price drops hard, a violent flush, everyone panics and exits. But you wait. You observe. You look for exhaustion. Volume dries up at the bottom. Lower wicks start forming. Candle bodies shrink. Order flow shifts from selling to absorption. That's your moment. You enter not when price looks safe, but when fear reaches its peak, because fear is fuel. And when it burns out, the market returns to balance. That too, the void retest. Sometimes price drops and bounces fast, but later it comes back. It retests the same zone, the place where pain lived. This retest is gold. Why? Because it tells you the void is now a memory, a psychological scar on the chart. And if price reacts there again, rejects it, you have confirmation that others still fear it. And fear leaves footprints. Pattern 3. Multi-time frame confluence. Here's where it gets powerful. You find a liquidity void forming on a 1 minute or 5 minute chart, but then you zoom out. You check the 1 hour or 4 hour, and what do you see? A major level, a higher time frame, demand zone, an old imbalance. Now you have confluence, fear on the lower time frame, structure on the higher sky. That's where the magic happens, because institutions trap on the small chart but position from the big one. You do the same. Real example, December 8th, 2023, GBP USD after UK inflation news. Price spiked 120 pips in 2 minutes. Total chaos. Longs got stopped, shorts jumped in. It looked like price was falling into a black hole, but one trader did something different. They waited. Pulled up volume profile, sellers were exhausted, noticed lower wicks forming, candle bodies shrinking. Market delta showed buyers stepping in, they went long, inside the void. While everyone else panicked, they entered calmly. 10 minutes later, GBP USD had recovered 70 pips. They trailed their stop, booked 4.5R. That trade wasn't luck. It was built on emotional patience, because in the void, time slows down for those who don't react. And the longer you can sit in discomfort without acting, the more you become the one who gets paid. So now ask yourself, have you ever seen a drop and thought, maybe this is the bottom, but we're too scared to enter? Have you ever exited in panic, only to watch price return? What would it feel like to flip that story? To wait until fear climaxed and enter then? That's what the best traders do. They trade where the pain lives, because markets don't stay in pain, they snap back to balance. And those who enter at maximum fear often exit at maximum profit. But here's the warning. This strategy only works if you're emotionally ready. If you try to fade the void without discipline, you'll get wrecked. You can't just buy the dip. You have to study the pressure, read the exhaustion, align the confluence, and most importantly, you must stay still while others panic, because when everyone else is trying to escape the void, you'll be waiting, planning, entering, and smiling. By now, you might be thinking, okay, I get it. I know how the void works. I know the trap. I'm good now. But here's the paradox. Open quote, the more you understand the void, the more dangerous it becomes. Close quote. Because now you don't fear it. You try to predict it. You try to conquer it. And that's exactly how it traps you again. Not through ignorance, but through overconfidence. Let me tell you a story. Early 2023, an experienced trader I knew, 6 years in the game, consistently profitable, discovered the concept of liquidity voids through our content. He got obsessed, studied the patterns, back-tested setups, marked his charts with confidence. Then, you or JP gave him the perfect storm. 3 setups in a week. All looked like void traps. He faded every one, without waiting for confirmation, without patience, because now he thought he could see through the market. All 3 trades? Wrong. The moves didn't reverse. They continued deeper. He lost 3 cents 3 times in a row. Frustrated, he doubled his position size on the next one, telling himself, open quote, this one has to bounce. Close quote, it did. But he was so shaken, he closed too early, missed 80% of the move. He was right about the pattern, but wrong about his state. Open quote, and the market doesn't reward technical knowledge when you're trading from emotion. Close quote. That's the trap within the trap, because most traders don't fail from lack of skill. They fail from getting too confident, entering too soon, taking too much risk, trading to prove something, fighting the market instead of flowing with it. Top mistakes traders make with voids. One, chasing the void. You see price dropping and think, open quote, this is it. It's overextended. I'm getting in now, close quote. But you enter mid drop, no structure, no confirmation, just a gut feeling and a hope, and the void keeps going. You catch a falling knife and bleed. Hash 2. Reversing too early. You identify the void, but you're impatient. You fade the move before exhaustion appears, no slowdown, just raw momentum. And you step in front of a speeding train. 3. Over leveraging. Open quote, this has to reverse. Close quote. Famous last words. You increase your size to make back a loss, to amplify the guaranteed bounce. But the void doesn't bounce when you want it to. It waits until you're forced to exit. Then it turns. Henar 4. Trading every fast move. Not every spike is a void. Sometimes price moves fast because of real reasons. Momentum, macro news, institutional flow. If you treat every drop like a trap, you'll fade real strength and get destroyed. Open quote, discernment matters. Close quote. 5. Using voids for emotional revenge. This one is deadly. You see a drop and think, open quote, I know this game now. You won't get me again. Close quote. So you enter not from strategy, but from ego, to prove you've grown, to prove you're smarter now. But the void doesn't care about your growth. Open quote. The void feeds on ego. Close quote. Now ask yourself, have you ever seen a move and said, I know what this is, and entered early? Have you ever increased your risk because the setup looked too perfect? Have you ever faded a move out of anger? That's the trap in disguise, because it's not about being right anymore. It's about being in control. Open quote. And when you trade from the need to prove something, you've already lost. Close quote. So what's the solution? It's simple. Open quote. Precision beats aggression. Void setups require emotional neutrality. Close quote. Not hope, not pride, not vengeance, just pattern plus patience. The best trades don't feel exciting. They feel obvious and calm. You wait, you confirm, you size small enough that your nervous system stays quiet. You don't need to catch every void. You just need to avoid the ones that catch you. Because in the end, open quote, the void doesn't punish technical mistakes. It punishes psychological exposure. Close quote. And until you trade without needing to be right, you'll keep finding yourself on the wrong side of perfect setups. This is the chapter no one wants to face, because this one isn't about charts. It's about you, about who you become when the market breaks your expectations, when your system fails, when your confidence cracks, when the void opens, and your identity is exposed. Most traders build their self-image on being right. They think, if my analysis is solid, I'm good. If I win, I'm a pro. If I lose, I'm broken. But the void doesn't just take your position. Open quote, it tests your identity. Close quote. It asks, who are you without your confidence? Who are you without control? Do you flinch? Do you fight? Do you freeze? Or do you breathe? Do you watch the chaos like weather through a window? Because here's the truth. Open quote, the market isn't attacking you, it's revealing you. Close quote. Your reaction to the void isn't a market event, it's a mirror. It reflects your fear, impatience, ego. And unless you've seen yourself in that mirror, raw, uncomfortable, exposed, you haven't started the real journey. Let me share a journal entry from a trader in our community. He had just conquered the void, not on a chart, but in himself. Open quote, the candle dropped hard, my hands didn't move, my body stayed still. I watched the trap happen and felt nothing. Not fear, not excitement, just observation, like watching wind bend a tree. That's when I knew I'd changed. Close quote. That right there? Open quote. That's what mastery looks like. Close quote. Not just knowing more, but being more. Because the final evolution in trading is not about better indicators. It's about emotional calibration. It's about staying grounded when everything screams for your attention. And here's where it gets real. If your trading identity is built on being right, you're fragile. But if it's built on awareness and discipline, you're unshakable. So ask yourself now, honestly, do you trade to win or to feel in control? Do you follow your plan or your impulse? Do you walk away when the void opens or chase it to prove something? What version of you enters the void? And more importantly, what version walks out? Because the void will return. And when it does, it won't care about your journal entries. It won't care what you know. Open quote, it will test what you've become. Close quote. And in that moment, you'll have one choice: react from fear or respond from wisdom. Every candle is a question, and every reaction is your answer. So, who are you? Are you still the prey chasing relief, or are you the observer waiting for clarity? Open quote, the void doesn't destroy you, it introduces you to yourself. Close quote. You've seen it before, that sharp red candle, that unexpected spike, that moment when the market feels like it's personally hunting you. You feel your chest tighten, your mouse hand twitch, the thoughts racing. Open quote, not again. Do I close now? Should I reverse this? Close quote. This isn't a new moment. It's the same moment returning. Because the void isn't a one-time trap, it's a cycle. It comes back over and over. But the question isn't, open quote, will it return? Close quote. It's open quote, who will I be when it does? Close quote. Most traders forget this. They study setups, they learn the void structure, they even spot it early, but when it hits their screen live in real time, they go blind. They forget everything, because knowledge doesn't matter when fear is louder than memory. Let me be clear. Open quote, the void will test you when you're at your weakest. Close quote. When you're up big and want to protect profits, when you're down bad and desperate to recover, when you've just had 3 wins and feel untouchable. That's when it strikes. Not because it knows who you are, but because it knows what kind of emotional pattern retail traders follow. And unless you rewrite yours, you'll keep playing the same role. So pause and reflect. How many times have you recognized a trap and still entered anyway? How often do you promise to wait next time but don't? How many voids do you see too late or fade too early? That's not a technical issue. That's a reaction loop. And to break it, you need to upgrade your response. Step 1, anticipate the return. Don't treat the void like a surprise. Expect it, map it, plan for it, watch volume compress, track when the market breathes in. Open quote, the trap doesn't hide from you. You just stop watching when it's boring. Close quote. Step 2, preload your behavior. Before the trap appears, know exactly what you'll do. Will you wait for exhaustion? Will you downsize your risk? Will you pause 5 minutes before any decision? Write it down. Say it out loud. Make it muscle memory. Open quote, because in the moment you won't have time to think. You'll only have time to act. Close quote. Step 3, separate emotion from identity. The void will make you feel like a fool, a failure, a fraud. But those are just emotions. They are not who you are. Open quote. You can feel doubt and still act from discipline. You can feel fear and still stay seated. Close quote. That's what professional traders do. They don't trade without emotion. They just stop letting emotion lead. Let me share something a trader wrote after mastering their response. Open quote. The void returned today. I saw it happening. My heart reacted, but I didn't. I waited. Confirmed. Then entered the reversal. Same chart, same setup, different me. Close quote. That's the power of awareness over automation, prey to predator, reactivity to readiness, emotion to execution. So let me ask you truly, when the void returns, and it will, what will you do? Will you click out in fear? Will you chase your losses? Will you forget everything you've studied? Or will you pause? Will you breathe? Will you trade like the version of yourself you promised to become? Because the next time it appears, it's not just price that's being tested, it's your identity, growth, evolution. And every void is asking the same question. Open quote, are you still reacting or finally responding? Close quote. Now you see it, the trap, the void, the panic loop, the engineering, the patterns hidden beneath the chaos, and most importantly, the mirror. Because every spike, every fake out, every reversal was never just about the market. Open quote, it was about you, close quote. How you react, how you think, how you feel under pressure. And the truth is, the market was never your enemy, your own behavior was. But now you don't chase candles, you don't panic in red. You don't trade because you're bored or angry or afraid. You wait, you observe, you enter with precision and exit with intention because you've seen behind the curtain. You've watched the institutions engineer fear. You've felt the void open beneath your stop loss. You've been the victim, open quote, but not anymore, close quote. Now, You trade where others flinch. You see setups where others see chaos. You execute while others hesitate. That's not luck. That's not talent. Open quote, that's clarity. Close quote. And clarity is the predator's most lethal weapon. So here's your new standard. Don't just survive the void, use it. Don't avoid fear, harness it. Don't fear traps. Learn to walk inside them calmly and come out with profit. Because at this level of the game, open quote, it's not about who has the best strategy. It's about who stays collected when everyone else breaks. Close quote. And if you've made it this far, if you've felt the shift, open quote, you're no longer the prey. Close quote. Open quote, you've escaped the trap. Close quote. Now go hunt.